"12 Ways to Invest in Real Estate." Investing in real estate is one of the fastest, most effective ways to grow your wealth. But it seems like such a daunting concept, doesn't it? When you think of a real estate investor, you tend to picture a well-dressed man sipping an espresso, constantly talking on the phone, texting and emailing clients, all in the name of closing the next deal. You picture late nights and long weekends spent driving hours outside your city or town to scope out investment prospects, never having a free moment to yourself. Yikes! In reality, investing in real estate is not as scary as it seems. It doesn't have to be anyway. Sure, it requires some hard work, but everything worth having does. Once you get your feet under you, real estate investment pays off in spades. Here's how you, yes you, can do it. Number 1. Get a grip on your finances. Before you can invest your cash, you must have it firmly under your control. Establish financial security before reaching for extreme wealth. Make sure you pay off your consumer debt, accumulate an emergency fund, and have a solid plan for your retirement savings. Then, and only then, should you move forward with your real estate investment. If you need help with this step, there are plenty of resources that will teach you how to manage your personal finance. Search online for books, seminars, or courses, and make sure you are educated about your finances. A solid financial education is the cornerstone of future wealth. Number 2. Scout out the local housing market. While you are establishing monetary security and growing your financial education, you can use this time to scope out the local market. You don't have to look far to find good prospects. You just have to do the proper research. It's even more beneficial to look within your own neighborhood. There could be a gem right under your nose. And investing in a property within your current neighborhood eliminates a lot of the mystery that tends to come with purchasing a new property. By staying local in your search, you are minimizing the risk of investing your money. Number 3. Be a team player. Real estate investing is not a solo sport. It will require you to seek out a myriad of professional opinions from agents, lawyers, accountants, and contractors, all of whom can help you smoothly operate your business ventures. Dana Bull, a marketing consultant turned realtor, said in an interview with Business Insider, "I think if you really want to get into real estate investing, you need to focus on building relationships with people, because that's what real estate is. It's a relationship-based business." Number 4. Buy a home and rent it out. Once your finance and team are in place, it's time to take the plunge. If you opt to buy a single-family home to rent out, just be sure to keep your overhead costs low. The rental payments for your future tenants have to cover the mortgage payments, taxes, insurance, and maintenance for the house. If you don't calculate the rent just right, you could end up losing money. The good news is that your mortgage payments will remain steady, while your rent prices will slowly increase. This will add up to more take-home profit in the long run. Number 5. Flip a fixer-upper. I know. Now you're picturing the TLC channel, shiplap walls, and crown molding. This method has become revered in pop culture as the only glamorous way to do real estate. But it's not really that glamorous at first. Flipping a house requires a lot of time, patience, and money. But if it's done right, it will pay for itself and then some. If you take on one of these projects, it is especially crucial to call upon your team of professionals. A good real estate agent can help you tell the difference between a good prospect and a lost cause. And a good general contractor can help you save thousands of dollars in the renovation process. Find your pros and treat them well, especially when you flip a fixer-upper. Number 6. House hacking. House hacking is a less traditional, more creative way to break into the real estate game. First, buy a multi-unit building with a mortgage, ideally 4 or 5 units. Then, you can live in one of the units and rent out the others. This way, you are only paying one mortgage instead of 2, cutting back on your living expenses. The rental payments from your tenants or neighbors will generate enough income to cover all your overhead costs, with more left over to go right into your pocket. You can reserve this money for any necessary maintenance or invest it to grow your wealth even faster. Number 7. Rent a room. If you want to be a landlord someday, but want to test the waters a bit first, consider renting out one of your rooms on a vacation rental site like Airbnb. It's basically house hacking, but without the long-term commitment. With Airbnb, the host guarantee provides protection against any potential damages your property may sustain, and the renters are somewhat pre-screened before they set foot on your property. Renting out a room on a nightly or weekly basis has a much quicker turnaround time than the intimidating task of purchasing a house or a building. Whether it's a suite in a basement or a spare room upstairs, you can easily list it for rent online. While it probably won't result in any full-time income, unless you live in a high-traffic tourist area, it does make a steady side hustle to generate some extra income. Number 8. Rent a room long-term. So you've rented out your spare room or section of your house for a short-term vacation rental, and things are going pretty well. Maybe you feel like you're ready for a bigger commitment and your next step in your landlord journey. This next step could mean renting on a long-term basis. Renting leases of 6 months to a year is especially effective if you live in or near a college town. Students typically need housing for 8 to 9 months out of the year, then move back home for the summer months. This is a perfect opportunity for you to stretch your landlord skills and build your confidence. Take a look at your city's demographic. If there are a good number of young college students in need of off-campus housing, you're in a perfect place to grow your business. Number 9. Buy real estate investment trusts, or REITs. Real estate investment sounds like a great opportunity, but maybe you're not so keen on the manual labor, managing tenants, or scoping out physical properties. Don't count yourself out of the game. Buying REITs is the perfect way to invest in real estate without ever getting your hands dirty. Real estate investment trusts are much like mutual funds. They are typically companies that own commercial real estate such as hotels, apartments, retail spaces, or office buildings. You can invest in their projects, let them do the heavy lifting, and profit off your joint success. REITs often pay high dividends, so this investment is common for people around retirement age. Investors who can do without immediate income can turn their investments back around, reinvest their dividends, and grow their investment wealth even more. If you have some money saved up, REITs are a moderate risk, high reward investment option to multiply those savings. Number 10. Online platforms for real estate investment. Similar to REITs, there are several online platforms that you can use to launch your real estate investment journey. These are ideal for people who have enough investment capital to invest in more substantial residential or commercial deals with other investors. When you join one of these platforms, it will connect you with real estate developers who match your criteria. You can specify how much or how little you would like to invest, what category of real estate interests you, and what potential rate of return would be ideal for your situation. Then, the platform does the searching for you. While this option is fast, easy, and convenient, you have to keep caution in mind, as with anything on the internet. At one point in time, you could only participate in these real estate investments if you were an accredited investor. Nowadays, certain types of investments do not require accreditation. While this is a great thing, providing easy access to those just getting started on their investment journey, it has also attracted folks with ill intentions. Just be sure to properly vet and research any potential investment opportunities before giving out any of your private information. Number 11. Investing coworking spaces. In 2018, CNBC released a study that showed 70% of office workers around the world telecommute or work from home at least one day a week. This industry has expanded in recent times. While it used to be a trend for freelancers and solopreneurs, corporations have made the majority of reservations in co-working spaces in the last couple of years. Analysts forecast that over 1 million people will be regular members of co-working spaces by year 2022. So how can you break into this growing industry? The easiest way is to invest in our handy-dandy REITs, ones that are specific to co-working spaces. Alternatively, you could be more involved in the process. If you have an office space that you lease or own, rent out part of the building. According to DeskMag, nearly 2/3 of all co-working spaces in the United States are side hustles for their owners. If you're feeling confident in your entrepreneurial skills, you can even launch your own co-working space. It's a relatively simple concept. Rent or buy an office area, then sublease the conference room, desks, or lounges to potential members. We've come to our 12th way how to invest in real estate. But before we get there, consider subscribing and hit that notification bell. And if you like this content, comment below and we'll bring you more of the same. What's our 12th way how to invest in real estate? K.I.S.S. Keep it super simple. At the end of the day, keeping your strategy simple will go a long way, regardless of your real estate investment strategy. Don't fall for the age-old trope that you need to go big or go home. It's best to start small and keep your investments low, especially as you get your feet wet. If your goal is to generate a passive income to sustain your wealth in the long run, keep it super simple. On an episode of the Mad Fientist podcast, K.I.S.S, a real estate investor and early retiree, said, "In my mind, the game of rental properties is eventually getting it free and clear of debt, so that you have a low-risk, high-income investment that allows you to go to Ecuador and do whatever else you're doing with your life, leave your job, or have a little independence to do other things." Keep K.I.S.S' low-risk, high-income philosophy in mind as you begin your real estate journey. Thanks for watching Cerebral Life, the channel where you learn more and improve your life. See you next time.